space. Shalimar Paints, that's a buzzing stock. Surendra Bhatia, MD of Shalimar Paints, now joins us. Mr. Bhatia, good morning. First things first, your stock has rallied a lot, in market. There was some buzz of some kind of potential takeover. Is there something there, in which there's some bit of truth that the promoters of Shalimar Paints might be looking for a bit of an exit?
No, let me clarify on this. Promoters are very much with Shalimar Paints, and there is no plan to divest any of the equity of the promoters. So I want to make it clear. So there is no plan of selling off or divesting. So they are very much with the company, and they will support more and more.
Okay, so no plans to sell, but you all are not in any conversation with any potential investors either? No talks happening currently?
Not at all.
Okay, fair enough. Can you tell us a little bit about the growth picture for the company? Because in the quarter gone by, your growth has matched some of your larger peers like Asian Paints. I mean, in Q1 itself, you've seen a growth of around 12.5% in your revenues, while other companies like Asian Paints have grown about 10-11%. Is this a growth that is sustainable through the year, and what do you think is leading to that?
Yes, this kind of growth, even I think because first quarter was, I think for Shalimar it was a little slow. So if you see coming quarters, we should have better growth than this.
Okay. Mr. Bhatia, how would you expect the margins to perform? Is the best of raw material reduction behind us, or do you think that you can still improve on both gross and operating margins?
Yes, if you see, margin for us depends on three things. One is crude prices, then your INR to US dollar, because we import some of the raw materials. So if rupee is weakening, so our import prices will be up. And third, we are with the market, so whenever crude is getting reduced, so we are passing on some of the price reduction to the market.
Okay. Well,
so it's not totally dependent on crude. Yeah, crude is the major impact, but we pass on also, and then INR versus USD is also impacts our margins.
So your guidance for margins this year would be 35% maintainable?
Yes.
Okay. Well, I wanted to know.
Right now it looks very positive.
All right, that's good to hear. I wanted to hear a little bit about your product mix as well. You have, of course, a lot in terms of distemper, but other value-added products are also there. Can you give us your breakup and how it might look, say, in the second half when the big Diwali demand starts?
If you see, like, we have introduced 4 new products in decorative segments, and most of these were introduced in March 16. And if you see, the impact will start coming. Now our products are placed with our channel partners, and then it's going to the secondary market. So for Diwali season, it will help us a lot, because now we have full range from luxury, mid-market to commodity. So all these 3 segments will help us, and it will help us to grow our sale.
Okay. Mr. Bhatia, let me get back to the question that Sonia asked you, because that question was pertinent, because over the last 5 or 10 years you have underperformed your peers by quite a margin in terms of your top line CAGR or compounded annual growth rate. But this quarter has looked good. Could this be start of something bigger for a company like Shalimar Paints?
Yeah, what we realize, like where we are lacking in respect to the market. So one was the product range, the second one was the brand equity. So if you see, last year we started advertising on FM and radios, and this year we are with TVC and radio again. So because Shalimar is well-known brand, but we realize we need more promotion. So that's why we are investing a lot on the brand equity.
Okay, so if you had to give us an estimate for what the growth could look like for the next couple of years, in FY16 you are sitting on a base of around 400 crores of revenues. How much do you think it could grow to,
Yes.
say, over the next two to 3 years?
If you see, normally we don't discuss the figures, but I think mid double digit CAGR for next 4 to 5 years looks feasible.
Okay, so are we looking at about 550 to 600 crores? Even if we take mid double digits, so suppose you take 13% growth next year, then that would mean about 550 to 600 crores of revenues. Is that something that's doable?
I think if it is mid double digit, no, I'm saying like between mid double digit is like between 10 to 20, so I'm saying around 15%
Okay.
CAGR. Yeah.
Mr. Bhatia, I have two quick questions. First, what's your market share and your actual capacity and capacity utilization?
If you see, we are right now operating at around 80 to 85% capacity.
Okay.
But we have come up with new plant in Chennai,
Okay.
which was under testing. So now we will be fully operational in that, and it will increase our presence in south, and we will supply from there to east also.
Okay. Well, I have a slightly troubled question to ask you. Well, not troubled, maybe it's even positive. There repeatedly are rumors that the promoter will look to sell out. Can you give us any idea of what is in the promoter's mind? Jindals have the maximum, right? 30%.
Yes, around 33%. I think this was the first question also, and I have already replied. Promoters want to be invested in Shalimar, and they are very, very enthusiastic about Shalimar, and it will continue.
Okay.
Okay, then finally, before we wrap this conversation, just wanted to get back to what the demand situation is looking like, not so much in the Tier 1 cities, but in Tier 2 and Tier 3 cities. Where are you seeing the maximum pickup, and how does it look for the next, say, 3 to 6 months?
If you see, this year looks very positive, because normally if you see, paint industry grows 1.5 to 2 times of GDP. And this year looks more balanced. Like if you see in urban area, the disposable income with households is increasing with 7th pay commission and other things. And at rural area or mid cities, we can see like monsoon is very good this year and economy is upbeat. So I am very positive about this year and future years.
Okay, we'll leave it at that. All the best for the next few quarters. And that's the word coming in from Shalimar Paints. That's actually optimistic, the view. 15% CAGR in revenue growth over the next couple of years is what they're forecasting. That's a healthy growth.